COVID-19 pandemic has hurt thousands of retail stores, restaurants, offices, hotels, and many other types of commercial establishments. Up to now, the commercial real estate market in the U.S. has remained pretty quiet on their situation. Lenders have granted struggling building owners months of forbearance, avoiding destruction. But soon, that all may be about to change. Now in 2021 and 22, many property owners who've fallen behind on debt are going to have to throw more money into their building, sell at distressed prices, or give their keys back to the bank. The other difficult news is that about $430 billion in commercial and multifamily real estate debt matures in 2021, forcing lenders and borrowers to deal with what buildings are worth in lieu of the pandemic's aftermath. All of this means a lot of uncertainty for the banking and commercial real estate entities. And the damage has the potential to cause additional waves beyond building owners and their tenants. Commercial property underpins the tax base in many areas around the U.S., and a downturn could pummel local budgets. As loan losses increase, the slump could also put stress on the banking industry. The Federal Reserve in late 2020 singled out commercial real estate in its Financial Stability Report, indicating particular signs of weakness. Unlike the financial meltdown of 2008, COVID-19 has affected all the real estate fundamentals by changing how people live their lives. Travel will be slow to come back. Hotels are struggling with occupancy rates, and people are still hesitant to flood many retail stores. And companies are already deciding they can get by with less office space. Many offices had staff cutbacks, or their employees began working permanently from home. Don't forget the rise of e-commerce during and after the pandemic. This is causing a glut of retail space, coinciding with an already falling environment before the pandemic. Over 110,000 restaurants have closed permanently as of March 2021, and many more are expected. As remote work has enabled people to leave high-cost areas such as New York and San Francisco, many apartment markets have started to show the obvious signals of stress. This includes rising vacancies and falling rents. However, more affordable markets like Dallas and St. Louis are faring much better. As of March 2021, many renters have been given grace time for those unable to pay their monthly rents. But those grace periods are quickly ending as owners face commercial loans that are now coming due again. The COVID-led commercial real estate financial crisis is having a huge impact on retail properties. During the difficult 2020 months, the owners of two portfolios consisting of 130 shopping malls filed bankruptcy after a slew of stores and restaurants either closed or couldn't pay their rents. Many commercial real estate brokers say the pandemic was the final push for retail stores and many malls that had already been in decline. Experts say the retail market has been under distress for several years because of shifting consumer shopping practices and the growth of online sales. According to Statista, retail vacancy rates across the U.S. in mid-late 2020 hit an average of 20%, up from 9% when 2020 began. Even worse, vacancy rates have soared even higher in shopping malls. Elderly consumers are still hesitant to spend much shopping time in older, less safe malls since the pandemic, opting instead for ordering via the internet and drive-through pickups. Prior to the pandemic, many malls suffered sales losses because of their losing key anchor stores such as Sears, JCPenney, and the like. A recent Klarna study showed 73% of U.S. shoppers trying to shop smarter since the COVID-19 pandemic started. People now say they are seeking out sales, using coupons, buying bulk, and using buy now, pay later options. It's too early to say how commercial real estate will fare as life hopefully returns to more normalcy someday. That will probably vary from market to market, but many won't be surprised if there is a continuing glut of empty buildings and vacancies in the commercial real estate market. We'll see. This is H.A. Graves.